Amazon just announced that they are purchasing satellite company Globalstar. Why in the world does Amazon want to get into the space satellite internet business?
There's actually a good reason. We're going to talk about that. And in the process, we're actually going to talk about Amazon and Globalstar, of course, and another company. So make sure you wait and watch through the whole video when we talk about a small satellite business that could be a top supplier to this new Amazon space business.
Before we get to that, I want to give a quick shout out to our friends over at fiscal.ai. You're going to see a number of charts from Fiscal analyzing the three companies that we're talking about today: Amazon, Globalstar, and wait, I can't tell you that. But the charts are going to be from Fiscal. Great platform. And you get 15% off with our unique link right here, fiscal.ai/CSI. Let's talk about Amazon and Globalstar. Globalstar has a relationship with Apple. Did you know that?
Really?
You told me that.
Oh, I did.
And so that's now why Amazon has a relationship with Apple. And Amazon is acquiring this company, Globalstar, we'll say around $11 to $12 billion in acquisition costs in a combination of cash and stock.
I don't anticipate anybody watching now or at any point in the future owns shares of Globalstar. But if you do, I'd be really curious for you to say so and maybe say why.
Tell us why.
That'd be fascinating to know.
This company is interesting. We talked about AT&T Space Mobile.
Yep. Last year, we used to own Iridium Communications, which is a Globalstar competitor. We know who Globalstar is, but certainly never considered investing in, at least at any point in the last 6-7 years.
And why is Amazon investing in Globalstar? That's the big question. Why would an e-com company with the world's biggest business, if we're measuring it by revenue, why would they want to buy a small satellite company with a few dozen satellites in low Earth orbit, LEO?
Thus the name, Amazon LEO. There's Amazon's revenue, $717 billion. Should we compare Globalstar? This is the first crazy thing that you'll probably notice is
they're making hundreds of dollars.
Yeah. The revenue is $273 million last year, but 11 to 12 billion acquisition. What is Amazon thinking? Are they just shoveling capital into the capital incinerator here, buying the small satellite constellation?
It is interesting though, because Globalstar has been increasing their revenue. They launched a new satellite constellation in the 2010s, so that's been a while now. What's this impetus for growth? Most likely, a lot of it is this relationship with Apple and other IoT services that they started around that same time. And then they also have a contract with another company, MDA Space.
We'll get to it.
Bookmark that thought.
But you're right, though. The big jump finally that Globalstar had in revenue a few years ago was tied to the Apple relationship in providing, if you have one of the newer iPhones or watch, and you can do emergency call via satellite, that's who Apple uses for that communication is Globalstar. We're still not to why Amazon wants it. Yeah, obviously Globalstar's incredible profitability is not the reason why either. And especially, as you said, Casey, they have a contracted MDA Space to build their next gen satellite constellation. It's going to be about 50 satellites, I believe, that MDA Space will build for them. So any meager amount of free cash flow that Globalstar generates is going to go to MDA Space's income statement and then some over the course of the next 2 to 3 years,
Right.
Which means that part of Amazon's free cash flow will probably go to MDA Space because they did reiterate that they will keep that contract in force with this acquisition.
So you can bookmark that thought. We're going to come back to that. And just a side note, there were some reports that SpaceX was also interested in Globalstar, but they ended up acquiring the spectrum licenses from EchoStar. And that company, EchoStar, owns Dish, Sling TV, and Boost Mobile.
So that didn't happen. Amazon is buying Globalstar instead, at least unless SpaceX comes in with a higher bid or something like that.
They pull a Paramount.
Yeah, exactly.
Let's just look through a few comments from CEO Andy Jassy about this, because this is very prescient about what we're talking about here. Billions of people all over the planet who lack high-speed internet access. Millions of businesses, governments, and other organizations operating in places without reliable connectivity. We know that to be the case firsthand. Sometimes when we're traveling internationally, fast internet can be very difficult to find.
Which is the beauty of something like SpaceX, Starlink. If you're staying in an Airbnb that doesn't provide good internet, well, you can buy a Starlink Mini and you're still in business. That's what Amazon Leo is going to do. It's going to be a competitor to SpaceX's Starlink. Amazon has been working on this for a few years now. It used to be called Project Cooper, Cooper as in the Cooper Belt, where dwarf planet Pluto resides beyond Neptune in the solar system. I like the name change to Leo, LEO, low Earth orbit. Cute. So Jassy was talking about this in his annual shareholder letter. Apart from enabling connectivity, Leo will offer 3 unique benefits. First, better performance, 6 to 8 times better on uplink, up to 2 times better on downlink than what customers have access to now. Second, performance will come at a lower cost. And third, Leo will seamlessly integrate with AWS, Amazon Web Services, the bread and butter for Amazon, the real profit generator.
And they're expected to launch officially in mid-2026. But they do report having some commitments from enterprises and governments, including Delta Airlines, JetBlue, AT&T, Vodafone, DirecTV in Latin America, Australia's national broadband network, which is great. Australia needs better internet.
Some of the worst internet we've ever had to deal with in our lives in a big city in Australia.
But the question remains, why did Amazon decide that now is a good time to add Globalstar to their business?
Just days after Jassy's annual shareholder letter, where he talked about Leo, in AWS's own words and in their own depiction, Amazon is all about a business flywheel, making those small improvements to the business, small changes, landing new business victories and wins to make the business better and develop this self-perpetuating growth engine. And it all starts with scaling digital products and services. If you think about it, offering more broadband internet to more people around the world means we don't have to use too much imagination here. It means they could sell more stuff to those people via Amazon. They could probably increase usage of AWS by opening up services that need broadband internet, like streaming TV. So that's the flywheel effect. If they get more people on broadband internet, Amazon, the e-commerce, sucks more people into the ecosystem. So that's ultimately the rationale. And really to go toe to toe with SpaceX, they need to speed up development here. So they said, let's buy this company, Globalstar, that has a bit of business already. They have wireless spectrum. They have customers, including Apple. Let's just buy it and kickstart development here and kickstart revenue generation.
And so here's some of the details of the deal that is offered. It's going to be, as we said at the outset, a little bit of stock, a little bit of cash.
Yep. Basically, in total, 11 to 12 billion. It looks like the cash portion of that will be capped at 40% of total Globalstar shares. So we're looking at a pretty minimal dent in Amazon's balance sheet. Let's say 4 to 5 billion in cash. If you're an Amazon shareholder like us, you're not even going to feel that. When the deal goes through, if it gets approved, you're not even going to notice what happened there. And even from a dilution standpoint, the other 60% paid out in stock. We're talking about a company worth 2 trillion. It's going to be pretty minimal. And obviously, Globalstar's negative free cash flow is also not going to be felt whatsoever. Because the big thing everyone's freaking out about is how much CapEx is being spent on AWS data center expansion. Different topic. So you've got a lot of stuff happening on land, the terrestrial development. Now we've got Leo going on overhead. So ultimately, Leo is a pretty small project in the grand scheme of things at this point, which is good. Very different from where Globalstar was at 30 odd years ago during the dot-com era, when it ultimately filed for bankruptcy because it ran out of money in around 2002, 2003 is when they ultimately folded and had to restructure. Probably not going to happen this time around because Amazon is very well funded.
Probably not. Hopefully not. So this is kind of where we can tie in some conversation about MDA Space, because in 2028, Amazon Leo is going to deploy the direct-to-device systems, because Amazon is going to inherit that contract that Globalstar had with MDA Space. In MDA, we would put in the integrated device manufacturer section of the industry flow. They design, manufacture satellites, space vehicles, and modules. And they do some in-house semiconductors as well.
Yeah, they made an acquisition last year. And if you haven't read it yet, we do have the Space Stock Index. Take a look at that. If you're wondering how we start our research, it's usually building a map like that of an industry. So give it a look if you're trying to sort out who's who in the space economy. Another way to think about this supply chain, instead of the typical semiconductor industry flow that we had on the last chart, we also have this economic hierarchy. Amazon/Globalstar would have, let's say, two primary infrastructure suppliers underneath them. MDA Space would fulfill the design and manufacture of the satellites. Blue Origin, Jeff Bezos' company, would probably take over from SpaceX for some of the launch of, especially Globalstar. I think Globalstar had SpaceX in mind for launching their next gen satellites that were slated for launch, I think, next year and into 2028. I imagine Blue Origin might take over that.
Wouldn't be a stretch.
Yeah. It's not like Amazon is vertically integrated per se, but their sister company, Blue Origin, can handle some of that launch service infrastructure.
And here's a little bit about the financials for MDA Space. Total revenues in blue, and then the total revenues percent change is the orange line. Fast growing company. They did have a little bit of corporate drama. They were spun off from private equity owner in 2020, and then they IPO'd 1 year later in 2021. They were part of the Maxar space business,
which was acquired by private equity in the late 2010s.
And then here's a look at their revenue breakdown. Satellite systems revenue is in red. That's by far their largest revenue driver. Green is robotics and space operations. And then purple is geointelligence revenue.
A pretty incredible run they've had with the satellite design and building. They've completely changed what the business looks like in just a matter of a few years. Whereas before it was more of a services and design shop. This is one I wish we had looked at it more closely a year ago when it was first brought to our attention, but here we are.
So let's take a look at where MDA Space is on a valuation basis. They had a nice bounce on this announcement with Amazon because we assume that investors feel like maybe there's a little extra visibility in where they're getting revenue from and then where they're going to realize that backlog into revenue.
Speaking of, the backlog for MDA Space is about 4 billion Canadian dollars. It is a Canadian company, and there is some backlog concentration there. Obviously, $4 billion backlog is pretty good. The company generates 1.6, 1.7 billion last year, Canadian dollars. Looks like that will be going up, but they have at least a couple of years worth of revenue in backlog. Who is that? Primarily, it's Globalstar. Now Amazon Leo, we would assume. They said they reiterated that contract is still in force. A company called Telesat, which merged with Loral Space in 2021. Interestingly, Loral Space and Qualcomm are who started the original Globalstar constellation back in the late 90s. So Telesat is the other portion of that big backlog, and the Canadian Space Agency. Those three customers are about 75% of that $4 billion backlog. So getting the confirmation from Amazon plus Globalstar is a big deal for MDA Space investors because there is definitely some customer concentration to be concerned with. One scenario, reverse DCF that we ran, numbers updated and pulled from fiscal. We are going to use, again, earnings per share on this one. The reason why we chose earnings per share is because the free cash flow can be highly volatile. This is, again, another manufacturing business, and especially a small manufacturing business. The free cash flow might be higher than what it should be at the moment after they kind of went through some elevated spending the previous couple of years. So we decided to use earnings per share to kind of smooth things out a little bit.
So earnings per share of 84 cents, growth rate 25% over the next 5 years, terminal rate of 4%, discount rate of 10% gets us to around $33 where the share price is when we made this presentation earlier today.
It's had a nice little pop higher, especially after the Amazon news broke earlier this week. This is one that we've had on our radar to do a deep dive into for a while. There you have it. Not exactly the deepest of dives, because we were talking about Amazon and Globalstar, but
You didn't know where this was going, did you?
yeah, we've come full circle. We built you a little mini supply chain for Amazon Leo. This one is one that interests us. So we're going to continue watching and see what happens, learn more, and you know where to go if we decide to do anything about it.
Before you go, make sure you check out fiscal.ai/CSI. Gets you 15% off any paid plan. Fiscal's doing a great job with providing investors the data they need to make good decisions.
And if you've made it this far and you're still with us, check out this last video we did on the memory shortage. Yes, the memory shortage is still a thing. It looks like it's going to continue being a thing throughout 2026, maybe into 2027. So watch this video on Micron.